Coming to comparative balance sheets. Now here we are going to prepare a comparative position statement or the comparative balance sheet of a business as on two particular dates. Now students, in this case we are going to analyze the changes in the values of assets and liabilities, or we can say that the changes in the financial position of a business as compared to the previous year. Now the format goes like this: comparative balance sheet of, here the name of the business or the businessman is written, as on the two dates on which the performance is given to you, the balance sheets are given to you, and you have to compare their changes. So now then we have particulars column. The previous year figures are written in the first column, the current year figures are written in the second column, and the next two columns are for changes. The first column for absolute change, that is in terms of money, and the second column is for percentage change. Now students, coming to particulars first, we will have the balance sheet division on the basis of sources and application of funds. Remember, in case of comparative balance sheets, we are supposed to prepare balance sheet on the basis of sources of funds and application of funds. So the first part here is sources of funds. Now in this case, or in this part of the comparative balance sheet, we are required to show various sources from which the business has calculated or accumulated its resources or funds. So the first part here is owners funds. Owners funds. In case of a company, the owners are the shareholders. So we will have share capital and reserves and surplus. Remember students, reserves and surplus also belong to the shareholders. So their total is taken as owners funds. We will name it as A. Then the second part is borrowed funds. I have named it as B here. Borrowed funds. As the name implies, borrowed funds means the funds which have been borrowed. They are the funds which our creditors, our lenders have supplied to the business for use in the business, and we are paying certain interest on them. They can further be of two types. The first one being secured loans, and the second one being unsecured loans. Secured loans, the loans on which securities have been paid, certain mortgages have been issued, and unsecured loans, those liabilities on which mortgages have not been given. Now students, once we have calculated both of these figures, we will name it as column number A and we will take it as column number B. And finally we will get total funds. Total funds are sum total of A and B. This would be our grand total. Once we have calculated sources of funds, we will then move on to application of funds. Now students, as the name suggests, application of funds refer to where these funds have been used. The first in this case would be fixed assets. A major part of the funds that we have collected goes into accumulating the fixed assets. Let us name it as P. Remember, in case any depreciation or accumulated depreciation is given to you, subtract depreciation from here, minus depreciation. Then we have Q as investments. that is the money invested outside the business. Then the next one being current assets less current liabilities, which in short we can say is the working capital for the business. Now students, add these P, Q and R columns and they will give us total applications, that is P plus Q plus R, and remember, as in a balance sheet they should be equal. Coming to these two columns, that is absolute change and the percentage change, they can be calculated in the same manner as we did in comparative income statements, that is by deducting the previous year figures out of current year. We will get absolute change, and the percentage change can be calculated by absolute change upon previous year figure into 100. Let us take an example to understand this point better. Prepare a comparative balance sheet of Excel Limited from the following information. Now here we are given information in the form of balance sheets for 2 years, that is for 2004 and 2005, and we are required to prepare comparative balance sheet for these 2 years. The information includes share capital, reserves and current liabilities on the liability side, and on the asset side we have fixed assets, investments and current assets. Now students, coming to the format of comparative balance sheet, we will write comparative balance sheet of Excel Limited as on 31st March 2004 and 31st March 2005, assuming that the years were closing on March, that is on 31st March. Then we have a column for previous year, current year, absolute change and percentage change, and all the figures are in rupees. Now coming to the calculation part, the first step is to write the sources of funds. So we have sources here. Now students, sources can further be divided into two parts. The first being owners funds and the second one being borrowed funds. So we have owners funds. Owners funds include share capital and reserves, and in this case both of them are mentioned here. We are given share capital for year 2004 as 8 lakh and for 2000 as 10 lakh. So we will write it as share capital (8 lakh) and 10 lakh. The absolute change would be 10 lakh minus 8 lakh, 2 lakh. What about the percentage change? The percentage change would be 2 lakh divided by 8 lakh into 100, that is 25%. Then we have reserves. The reserves are 5 lakh and 9 lakhs. Now students, the absolute change would be 9 minus 5, that is 4 lakh, and the percentage change is 4 lakh upon 5 lakh into 100, that is 80%. Let us total it out and we will name it as A, and A represents owners funds, which is 13 lakh for first year, 19 lakh for the next year, and the absolute change is 19 minus 13, that is 6 lakh. Percentage change would be 6 lakh divided by 13 lakh into 100, which comes approximately to 46.1%. Then we have borrowed funds. Borrowed funds again can be divided into two parts, that is secured and unsecured. But remember that in this case Borrowed funds imply long-term funds, that is long-term liabilities. So we need to put in secured here, secured loans, that is secured and unsecured. Remember, both these figures should be for long-term period. Now, in this case, there are no secured or unsecured liabilities mentioned here. So just put in blanks here. This would be your column B, which is blank. This is blank. Then we will have total sources, which would be A plus B. That would be 13 lakh and 19 lakhs. Again, absolute change would be 19 minus 13, that is 6 lakh, and 46.1% would be the change. Now students, in this case borrowed funds were not given. So we can actually ignore this column altogether. We can ignore this part altogether, right? In that case, if we decide to ignore it because no figure is there, in that case your total funds would be represented like this only. It would be your total funds. That is total funds 13 lakh and 19 lakhs. The change is same, that is 19 minus 13, which is 6 lakh. Percentage change is 6 upon 13, that is 46.1%. After this, we will come to application of funds. Now, continuing, I have mentioned total sources that we had calculated earlier at the top as 13 lakh and 19 lakh, and the absolute change and the percentage change. Once we have calculated the total sources, we will come to total application of funds. Now, the first application is fixed assets. Fixed assets for the first year are 10 lakh and for the second year are 15 lakhs. Now students, coming to the absolute change and the percentage change. 15 lakh minus 10 lakh would be 5 lakh and the percentage change would be 5 upon 10 into 100, that would be 50%. Let us take it as P. Then we have investments. I'll mention it as Q. The investments are 2 lakhs and 3 lakhs for the current year. We will put a line after the investment signifying that it has ended here. Now students, it would be, the absolute change would be 3 lakh minus 2 lakh, 1 lakh, and the percentage change would be 1 lakh upon 2 lakh, 50%. Then we have current assets and the current liabilities. So we will write current assets as 8 lakhs and 7 lakhs less current liabilities, which is 7 lakh and 6 lakh for the current year. Remember, we have to deduct this, and once we deduct it, we will get a new figure which will be your net working capital, which is R. So 8 lakh minus 7 lakh is 1 lakh, and here also it is 1 lakh. Let us calculate absolute and percentage change for these figures. In case of current assets, there is a decrease of 1 lakh, because in previous year they were 8 lakhs and now we have current assets of rupees 7 lakhs. So 7 lakh minus 8 lakh would be minus 1 lakh. The percentage change would be 1 lakh upon 8 lakh, which approximately comes to 12.5%. Since it is a negative change, I will mention minus sign here. Then for current liabilities also there is a decrease. 6 lakh minus 7 lakh is minus 1 lakh. And the percentage change would be 1 lakh upon 7 lakh, that approximately comes to 14.2%. Remember to put in negative signs here because they are showing decrease. But when we come to the total working capital, it is 1 lakh and 1 lakh. That means there is no change and hence no percentage change. Now students, we have application of funds as fixed assets, investments and net working capital. Let us total all these and we will get to total applications. That is total applications of funds, which would be P plus Q plus R. And it comes to 10 lakh plus 2 lakh, that is 12 plus 1, 13 lakhs. Then 15 plus 3, that is 12, plus 15 plus 3, that is 18, plus 1, that is 19 lakhs. Again, understand it carefully. It is P plus Q plus R. So for first year it would be 10 lakh plus 2, that is 12, plus 1, that is 13. And for the second year it is 15 lakh plus 3, that is 18, plus 1, that is 19 lakh. And this is your final calculation. You can see that the total sources that we have calculated earlier are equal to total applications. Again, we can calculate the percentage change and absolute change. Absolute change is 6 lakh and the percentage change is 46.1%, that is 6 upon 13 into 100.